Hi there, good morning, and you've tuned into ET Now. This is Buy Now Sell Now with me, Cheryl D'Souza. Along with me, I have Shrishti Sharma, who will be joining us very shortly. Let's quickly take a look at the markets, and as you can see it on your screen, at the day's high coming in for the benchmark indices, Reliance Industries has actually scaled or rather hit a fresh record high level in today's trading session. Remember, it's nearing a market capitalization of about 20 lakh crore rupees. So that is Reliance Industries for you. But remember, it is earnings season as well. So let's bring on board the management of Max Healthcare Institute to understand how the quarter gone by was for the company and exactly what should one look out for going ahead. We have Abhay Soy, who is the MD and CEO of the company, joining us on the show. A very good morning to you, Mr. Soy. Thank you so much for joining us on ET Now. There's Cheryl on the other side. And if you look at your earnings and the quarter gone by, we've seen steady growth once again. If you could actually help us understand what are the factors that were at play in the quarter gone by, that's Q3 FY24, which actually led to such a fantastic quarter coming in for your company, given the fact there's usually a week for the hospital sector as a whole.
So we've had, we were just basically a new facility of 120 beds, which is on top of 3,400 beds. So it's about 4% more supply. These new facilities have done very well. In fact, Shalimar Bagh, we've had, a reported year-on-year growth and EBITDA growth of about 36% and 42% respectively, with an average occupancy of 74%. This is post-expansion of the new facility. So those are very healthy numbers. But yet, in the overall scheme of things, because it's only 120 beds on 3,400 beds, it doesn't move the needle very much. Q3 usually is a softer quarter because it's the seasonal quarter, and that is in the case this year as well. Last year, we had some amount of dengue still coming into this quarter. This year, we haven't.
This is Shrishti also joining in. When I look at your ARPOB growth, that has also seen a good improvement, not just on a quarter-on-quarter basis, but also on a YOY basis. What is the outlook for Q4, FY24 as well as beyond? Are we in for some more improvement in this number?
We don't give a guidance on numbers, but, the ARPOB growth should continue quite strongly. Oncology is a high ARPOB business that has grown much more than other businesses within the group. So that will contribute. International has grown by 25% year on year, and we've seen this very steady rise, and that's a high ARPOB business that is contributing. Number of surgeries are robotics this year are pretty much close to 100% of what it was last year. That contributes to higher ARPOB. And all these things are fairly secular. I also see people buying more and more insurance, and this particular group growing for us. And when people buy insurance policies, they're less price sensitive, as you may sort of appreciate, because you're paying the same amount of premium, whether you're going to ABC nursing home or you're going to a strong brand name. You're less likely to window shop at that point of time. So all these are fairly secular reasons, and I expect them to carry on in the future as well.
Right, Mr. Soy. Let's actually now put the spotlight on the ongoing CAPEX plans. If you could give us an update on that and the progress as well, especially if you could talk to us about the Lucknow facility as well.
Yeah, so, I think everything is on schedule. We've been putting out our CAPEX plans. The most recent one we expect right now is going to be Dwarka, which is going to be towards absolute end of this current financial year. We're expecting Mumbai next year by the end of the next financial year. We are, essentially the add-on to this is going to be Lucknow, which we recently sort of this thing, and we are looking forward to concluding that transaction very soon, perhaps within this quarter, and that is something which will come on stream. And we are pursuing some other transactions as well. But other than this, over the next 2 to 3 years, you are aware that we are expanding our capacity by another 2,700 beds, which is pretty much in schedule. This is all at a cost of what, 4,500 to 5,600 crores. But given our strong cash flows and a debt-free situation, we'd essentially be funding it through internal accruals only.
All right, Abhay, with this, we'll let you go on that. Thank you so much for joining us today on ET Now and helping with the growth outlook of the company. So that was the management of Max Healthcare sharing the latest updates on the CAPEX plan, where they plan to spend around 4,600 crores for the additional 2,700 beds that they are planning. And they also believe that the ARPOB growth will continue in the times ahead. But with this, viewers, let's move on and let's kickstart taking all your stock-related queries in the Buy Now, Sell Now show. You can connect with us live on a WhatsApp number that is on your screen, as well as you can also write to us on our social media pages, that is on the Twitter as well as Facebook pages. You can write your query, your stock name that you're invested in, your buying price, as well as the time horizon you wish to stay invested. So let's kickstart, and two of our very special guests on the show today is Avinash Gorakshikar on the fundamental side, as well as Kunal Bothra on the technical front is joining us live. A very good morning to both of you. And Kunal, the first query that I have is coming in for you. This one is an FNO query wherein a viewer named Giriraj is holding call options of AU Small Finance Bank. The strike price is 750 rupees at a cost of 37. Oh, now it is at just rupees 3. He's highlighting. Should he exit or buy more of the call of this particular strike price near for the times ahead?
See, I don't know the current price for the stock, but I'm sure that the current price for the stock would be significantly lower. The concern with AU Small Finance Bank is that multiple times the stock has gone past about 790, 800 levels, but it's actually met with a lot of correction post every time the stock had actually come back towards this 750, 780 breakout for itself, which means that it's not a comforting chart to really try and go for a a positional bet on the options or even on the FNO front. I would suggest not to add the stock or the options at current levels. In fact, if possible, look to exit and then move on to some other name, some other stock from some different sector.
All right. The next query that I have, Avinash, is coming in from Tanya from Ghaziabad, and she's holding 26 shares of MTR Tech from a price of 1,611 rupees. Is this a good idea to add some more at the current market price for the next 3 years?
Yeah, good morning, Shrishti. I think it's a good idea to add the stock if the investor has a 2 to 3 year kind of timeline. See, I think MTAR Technologies is a company which operates in the nuclear power as well as the defense space. They have a very healthy order book, and I think last couple of quarters, there was some margin pressure. There was some top line growth, issues which actually saw the stock correcting. But I sense is that defense companies usually have a very lumpy growth. You can't compare them on a quarter-on-quarter basis. So typically, if the investor has at least a 2-year plus view, then I think he can definitely use the current correction to enter. My sense is that keeping a 2-year view, I think the risk reward could be significantly better. So definitely, I think look at accumulating slowly and take a 2-year view. I think the risk reward should be very good.
All right, so that's the take coming in on MTAR Tech. On that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries, and also we have a very special guest joining us shortly, so don't go anywhere.
Welcome back to the show, and let's shift focus to some of the earnings candidate then. And Motherson Wiring came out with a good set of numbers this time around, and let's understand the outlook of the company going ahead, what kind of a growth that they are penciling in, what were the factors that were at play at this point in time that really supported the growth of the company. And just to give you an highlight of the company's financials this time, then the company did deliver a good set wherein the company's profit as well as margins, they both did show an improvement on a YOY basis. The profits were up 58%, while the margins have seen an improvement from 10.6% to 12.4% on a YOY basis. EBITDA showed a jump of 46%, revenues up 25%. So let's understand what the factors were at play and what are the key highlights for the upcoming quarters as well. Where is the focus area of the company? We are being joined by Mahindra Chabra, who is the CFO, and Anurag Gehlot, who is the COO of the company. A very good morning, gentlemen, and thank you so much for your time. Firstly, Mr. Gehlot, good YOY growth this time, and you reported the
growing Indian middle class with the increased disposable income is creating a large pool of potential car buyers. And these potential car buyers are feeding the demand for feature-rich model, prompting new model launches as well. So these customers are choosing, feature-rich or top-of-the-line models, and hence upgrade is happening. And this means more content of wiring harness in the car is good for us. So MSWIL will always be benefit as cost of the sales are dependent on the models. Hence, higher the model, higher the sales for MSWIL. So the growth which has you have seen from year on year or quarter to quarter also, and it's substantial and looks promising as well.
Good morning, Mr. Gehlot, as well as Mr. Chavra. This is Cheryl also joining in the conversation. And Mr. Chavra, particularly to you, this question is, if you could tell us how is the demand trend actually shaping up in the segments, and also the order book. If you could give us an update on the order book, how is it building up? If you've added any new clients or so?
Yeah, so in terms of demand, I think we saw the industries witness a good growth as far as Q3 is concerned. And our growth has been in line with the industry, both in terms of value and content as well, like Anurag mentioned. So it's a combination of volume growth in the industry and also the value growth, which is the content per vehicle is going up as the demand for high-end cars or feature-rich cars is going up. And as far as the trends are concerned, we think that this trend should continue. We already have January numbers, which shows the growth over the previous year. So we expect this growth trend to continue.
All right, and lastly, Mr. Gehlot, you did add new capacities, in which I believe must have contributed to the numbers this time. But what is the utilization level currently for some of the newer facilities, as well as tell us about your upcoming capex plans as well? Is there anything in store?
We have added the new facilities, and capacity utilization is reaching to an optimum level. As a company, we have a rule: as soon as we are touching to the 80% capacity, we have started expanding. Obviously, in line to the customer requirements and the need. And you must have seen some of the OEMs have already announced the expansion. So we are very much aligned with that. Regarding the capex, we have 125 plus minus some percentage of CR as a capex for this financial year, and our next financial year is planned accordingly as per our expansion plan.
All right, then we leave it there. Thank you so much, Mr. Gehlot, as well as Mr. Chavra, for joining us on the show and to talk about Motherson Wiring's earnings and where you see the order book and the demand headed from here on. Thank you so much for joining us. Well, viewers, let's continue taking your queries then that have been pouring in, and this one is coming in from Swati. And Swati is holding about 150 shares of Paytm at a cost price of around 750 rupees per share. For the next 3 months, Kunal, what should be her strategy? She wants to know, should she continue to hold on to it, because she's unable to sell it given the fact that the stock for a second day in a row is trading at a lower circle of about 20%. In fact, let me get a take coming in from both Avinash and Kunal on this particular thing. Kunal, what's your take on Paytm? What should she do now?
See, I think, of course, you'll have to hold till the time the circuit opens for the stock, for Paytm. After these 2 down days of circuit, the stock is now below the 500 mark, which I think is indication that the stock could probably see more further selling. The concern for the stock in the last 2 days is, in terms of technical factors, is the volumes, which is still very low for Paytm, which means that the delivery-based selling has not happened entirely, and that would probably indicate that the stock may see further down move over the next many trading sessions. So wouldn't be surprised that the stock would probably take some bit of more time for the circuits to open. So you'll have to wait out for that point of even to come back into the stock for Paytm before you look to exit the stock and then deploy the capital into some other name.
Avinash, what's your take coming in on Paytm in particular, given the fact that now people who are holding the stock are stuck because they were expecting the regulatory hurdles to be away with, the overhang of parent stake also being done away with. But now there's a new problem at hand when it comes to Paytm.
Well, I think, Cheryl, in the very near term, as Kunal pointed out, the bottom line is going to be severely impacted. I think on a average estimate, what the market points out is around 300 to 500 crores is going to be completely taken out because of this RBI regulatory measure. And I think in the very near term, you could see lower levels. So I think I would suggest that rather than selling in panic, wait for some more time, let the stock consolidate. And obviously on any rise, I think the investor should move out, because clearly, at this level, the capital loss would be significantly high. My sense is that the management has given a very strong commentary today on Twitter saying that everything is going on, and post February 29, they would be taking some measures to ensure that revenue does not get impacted badly. But I think there could be large institutional selling coming in also. So I would say that use any upside or any bounce to exit the stock. It would be better that she puts her money in some good growing sector like private banks, or typically capital goods, or housing, which is really which are sectors where she can recover her losses. So I think it's a sell on rise kind of stock.
That's the technical and fundamental take coming in on Paytm. But Avinash, once again coming to you to have your take on BDL. Hemant has bought 100 shares and his buying price is 1,700 rupees. He wants to know any target for the next 2 years?
No, I think since he's bought the stock, I think he should keep a timeline of at least 12 to 18 months. I would not be surprised that he could see levels of 22, so 2,300. A very strong business, very strong order book, and I think clearly, I think if somebody has a 12 to 18 month kind of time frame, the risk reward could be decent. But I think you need to have a little bit of patience and conviction to hang on. The rise would be gradual, but yes, it's a great company. I think numbers are also going to get better over the next couple of months.
All right, this one is coming in from V. Murli, who's writing to us from Bangalore. This one is for you, Avinash. He has 2 queries. Let me take one today, given the fact we have paucity of time. A lot of management's also joining us on the show. He wants to know whether he can buy Kaplan Point at current price for a period of 1 year. He wants to know that it's not a good expensive stock, but he's of the opinion that it has a good pipeline, higher ROEs than the bigger peers. So what sort of a target should he keep in mind while being invested in Kaplan Point for a period of 1.5 to 2 years?
I think my sense is, if he can hold on for the next 2 years, he could obviously expect a decent 40-50% upside. And currently, the company was largely into exports to African countries, but now they are moving on to the US markets. So US markets could be a very key re-rating trigger for the stock. So I think if he has a couple of years, I think at least 40 to 50% upside looks potentially positive and very much possible. But I think he needs to buy in smaller quantities and obviously then give some time for this investment to actually fully fructify.
All right. The next query that I have, Kunal, is on Reliance Infra. Prashant has bought 200 shares and his buying price is quite near to the current market price. 230 rupees is his buying price. Is this a right stock to stay invested for the next 1 to 3 months? What will be your view?
For once, I thought it's Reliance Industries. Had it been that case, then I would have suggested a hold. But Reliance Infra is something which I would suggest that it's a good time where you can look to exit since the cost has come back to your cost price. I think there are many better stocks in the infra space as such which are looking attractive. You can also move on to other sectors. I think the auto stocks are still looking quite attractive at current levels. From the financial services also pocket also there are many stocks like Bajaj Finserv, L&T Housing Finance, etc. looking attractive. And from the IT pack, I would recommend Infosys, Wipro as better bets.
All right, so that's the take coming in on Reliance Infrastructure, not Reliance Industry, which has hit a brand new high today, as well as markets. Nifty has surpassed the 22,000 mark. It's a blink and miss go. But on that note, we'll slip into a break. When we come back, we will continue taking your queries. Don't go anywhere. The Nifty, we are actually slowly, steadily, or maybe really swiftly heading towards that record high level, surpassing we may surpasses around 50 odd points or so, or little quite less points I believe coming in to surpass the record high levels when it comes for the Nifty. We'll get a take coming in from Kunal as well to talk about where does he see Nifty headed right now, and will today be the day, Kunal, that Nifty may hit a fresh record high levels? Is it, Kunal?
Well, I strongly believe so. In fact, it's just now 50 paise away from new high. 22,124 was the previous high. We've hit 22,123.5 so far on the index spot levels. So it doesn't come as a surprise that the index is doing exceptionally well because you have so many large cap names which are actually looking now attractive. In fact, I think the new high for the index has been made.
Yes, absolutely. A fresh record high coming in for the Nifty. We've surpassed that 22,124 odd mark when that was the previous record high. We've surpassed that. We hit an intraday record high of about 22,125 when it comes to the Nifty. So a brand new day. A brand new record high coming in for the benchmarks as well as for Reliance Industries, isn't it, Anisha?
Yeah, and I want to interject because I was having and fooling around with Kunal on that because he was very confident that it's gonna happen today. I was like, it's still far off. And after the reaction we saw yesterday on the budget, I was like, there are no fresh triggers.
It just took 15 minutes actually. He told you this 15 minutes
ago. We were having this conversation earlier as well, but clearly I think. Yeah, what a stellar rally, and Reliance all the way.
Definitely, Reliance is participating in giving that boost, but across the sectors we are seeing that cheer coming in. It's the autos, ITs, banking, everything is participating in this rally, and especially the broader market is cheering in too.
Absolutely, broader markets also in tandem with the benchmark indices. But on that note, we'll slip into a break, and when we come back from the break, we'll try and squeeze in as many queries as possible, so don't go anywhere. All right, let me just take you through the markets once again, because as you can see it on your screen, fresh record high coming in for the benchmarks, 22,100 coming in for the Nifty. Let's take a look at what actually the other sectoral indices are doing. Where is broader market headed? Are they outperforming the benchmark indices in today's trading session? Let's pull up the charts coming in for the mid cap index as well as the small cap index. Remember, that pocket of the markets has been actually performing pretty well for itself. So the broader markets, let's see where that's headed. There you go. The broader markets today are taking a bit easy. When you compare them to the benchmark indices, you have a Nifty that is rallying 22,100 mark. We've surpassed 22,125 in fact when it comes to the Nifty. So yes, it's a day of record high. And let's not forget about what Reliance Industries is doing actually at this point in time, given the fact that Reliance Industries also has hit a fresh record high levels in today's trading session. It is nearing that 20 lakh crore rupees in market capitalization. So that is how the markets are looking like at this point in time, Shrishti. So yes, good goings coming in for the market with Reliance Industries leading from the front. And Ajay, Reliance Industries, you've tracked this stock very, very closely, and it continues to surprise us because that's the one that's leading the markets higher. Nifty has surpassed.
Cheryl, the biggest story is that Nifty is heading towards all-time high, right?
In fact,
they just hit the all-time high.
Yeah, they hit the all-time high. Yes.
Now, the biggest story is that if you look at the reaction today, you'll be surprised, Srishti and Cheryl, this is the delayed reaction of the budget.
Yeah, absolutely.
This government has always taken a stand that good economics is good politics. And if you remember, just a week back, Finance Minister at one of its platforms did say that don't expect anything major, any massive fireworks in the budget. It will be prudent policy making. That's all you should expect. And what came through? It was exactly that. If you read Swami's take this morning in the front page of Economic Times, he has also said the same thing. Akash Prakash, a very well-renowned guy, has also written on his note. It was a very good, prudent budget. In fact, Nilesh Bhai is also joining us. Nilesh Bhai, afternoon. Thank you so much for chatting with us on phone. You must be en route to some meeting, I am suppose, but it looks like a delayed reaction of the street, which is now understanding that prudent policies are actually good for the economy. No real fireworks always should be expected from platforms such as budget.
Undoubtedly, Ajay, by yesterday's budget was citizens' pride and peers' envy. Market probably looked at global clues as markets were down globally day before yesterday. But yesterday, some of the results in global market pulled the market up. And then, we also came back to our fundamentals. The budget, or the interim budget as they call, was way beyond expectations of the market on fiscal consolidation. It still delivered on inclusive growth and infrastructure investment. Net, this is citizens' pride and peers' envy, vote on account.
Exactly. In fact, the larger point, if you remember, last hour of trade yesterday, we were speaking right here on ET Now, and you were saying that street may have not appreciated enough. The bond market actually has, better understanding, and that's why the yields tanked almost 10 basis points yesterday. That the lower borrowing number, good capex, all of that is a mixture, and disinflationary in nature could take rates lower in coming months.
So Ajay bhai, when you make such statement, and since I can wear both the heads of bond market and equity market, let me make a statement. Bond fund managers are real bond. They are smart.
That's a good point, and you have been one, yes, on both the sides, so you understand the bigger picture. Just one last word before we go. We'll let you go, Neeraj bhai. What does lower interest rates and lower inflation mean for market valuations right now?
Basically, lower inflation provides us macroeconomic stability. And lower interest rates this time is unlikely to benefit India Inc. as much because we are not really leveraged. The debt equity ratio is very, very low. But it does help on valuation side. Lower interest rate means higher valuation in equity market. And there are concerns on India's premium valuation. But if our local interest rate comes down, to that extent, valuation get re-rated. And eventually, over a period of time, this will push rating agencies to upgrade India's rating. We are going back to the path of fiscal prudence after COVID. We haven't given stimulus like mad as it happened in some of the other developed nations. We gave more guarantees and which were not encashed. And this has kept our debt to equity ratio or debt to GDP ratio for the country under check. So my feeling is that one, in the near term, it gives macroeconomic stability. Over medium term, it helps in reducing India Inc.'s interest cost and equities valuation. And eventually, it should result into the rating upgrade for India. How long rating agencies will have moody nature and poor standards?
Thank you so much for your time and that takes. So Nilesh is one of the very rare voices, Cheryl, who understands bond market. Yesterday it was all about bond market.
Yes,
so bond market
absolutely.
reacted first, stock market reacting now, because they understand that prudent economics and good policies do not have very fireworks kind of. It's it appear very boring and routine. Some people are even saying, "Arey, it was a non-budget, non-event."
Yes,
See what is
non-event.
happening now.
So when we had Mr. Bhasin just yesterday and I was sitting with him in that room, the time the announcement was made on the fiscal budget, he himself said that the yields will drop and SBI will be the biggest beneficiary.
And SBI results also there
Yeah.
today. So pull up SBI as well, guys. SBI is actually at a record high, heading towards a record high. We'll get Mr. Bhasin back on the channel because this morning at 8:30 when we were talking to him, and I asked him that whether we are heading to an all-time high in the next 24 hours or this week. He said no, 11 o'clock is when he's expecting it, just 1 hour. Pull up SBI. SBI is the one which is helping Bank Nifty a whole lot today, as well as the PSU Bank pack, right ahead of the budget. As Srishti said, also a big beneficiary of yields heading lower. SBI.
I spoke also to SBI this morning exactly on this particular topic itself. The State Bank of India chairman who said that the yields have already started trading on the lower side and said lower yields will actually help the private sector to come and borrow. So that's the statement coming in from the SBI chairman. And we have also Kunal joining us on the show. And let's talk about SBI in particular, Kunal, and let's actually talk about State Bank of India as well. Where is it headed? Because you have Ajay who said that that's also one of the beneficiary, given the fact it's headed towards the record high level as well itself. So what does it mean for the stock as well as the sector?
You know, the best part is Nifty is making new high. Bank Nifty is far off from the previous new highs, and SBI is also some distance away from hitting a new high above 660 levels. So that itself tells you that the market texture is extremely buoyant this time around. What we were lacking in the last 1,000, 2,000 points of the index, that large cap, the zing in the large cap stocks is missing. I think now that finally gets completed because look at the kind of stocks today which are rallying up higher. The PSU banking names, the private sector banking stocks are moving up higher. IT stocks, auto, Reliance, OMCs. So, you rarely get such kind of construct. And on such days, it's very difficult to restrain the Nifty. So, I think it doesn't come as a surprise that you're seeing the index hitting a new high.
Let's have Bhasin Saab back on the phone line. Sanjeev, in the morning when I asked you that 24 hours, whether we'll hit an all-time high or this week, you said 11 o'clock. It's 11:30 or thereabout when we hit. What precision? Where do we go from here on?
अजय जी, yesterday ऐसे ही नहीं मैंने भंगड़ा डाला था आपके साथ.
Yes.
और मैंने आपको कहा था, I told you don't underestimate the power of the Indian bull and the Indian retail. That is where the money lies. The money does not lie with the foreigners. It is the Indian retail and the Indian bull and the Indian PSUs. When have you seen PSUs hit the type of highs they are doing? So God bless, touch wood, keep watching ET now and make money. And I told you 12 hours will be, 24 hours will be completed at 11 o'clock. The budget is not finished of yesterday's and the index is new highs. So the feeling of missed house is humongous. I told you banks will join the rally. This is the time to put your money where your mouth is. Choose good stocks, preferably more on the large cap, but at least participate. We have miles to go before you sleep.
Superb on a day like today. So give us some fresh 2 ideas also before we let you go. We are getting greedy.
So Ajay, I am very, very optimistic on Nestle. Now, I own Nestle from 25 years and I will make no bones that I will be beneficially if it goes up. But Nestle, according to me, is a 30,000 rupee stock. So buy Nestle, the results are on 7th. It will be a huge outperformer. And my other pick, I again reiterate, India Bull Real Estate is a no-brainer. This stock is headed to 200 by the end of the year.
So that is Nestle India as well as IBREL, that is India Bull Real Estate. A no-brainer is what Mr. Bhasin has to say. Thank you so much, Mr. Bhasin, for joining us on the show, sharing your new, fresh top picks with our viewers, as well as talking about the markets, given the fact that looks like Ajay, Mr. Bhasin predicted absolutely right, and also kudos to Kunal as well, isn't it?
That's correct. Kunal can actually tell hour by hour, kind of a call and where to trade, where not to trade. So that was a good one. We'll take a short break on the show and come back with markets at noon on the other side.